particular session. You got it?
Got it. Yep.
You sure?
I'm pretty sure. It's just, I mean, I see those downticks, as you pointed out, on the MFI, CMF. It just, again, with the inexperience that I have with this, just trying to also immediately interpret that to start thinking short. And again, just because I haven't, started actually putting some of this to use. So
Okay.
that's all.
So let's suffice it to say, and please, I'm going to ask you to please put into context what I'm saying between your lack of experience, maybe my more experience, and learning something new today is that even though you have positive divergences on an end of day basis where the market should turn back around after the shakeout, right? Because even before it started to move up, I said this would be a logical place for the market to tap out and turn around before it did, right? Remember?
Yep.
Yeah. So we were right. Okay. Just like I made that call, you're going to have to trust me that I'm making this one today, that when you get, the beginning of an uptrend, longer term basis, longer term, horizon, weeks, months, whatever it is, there's going to be days when you're going to have a down day in between all that. Do you understand that? How simple that is?
Yep. I understand that.
Okay. So let's go with that for now. I'm not saying that I'm not going to trade long. I'm just saying that everything was looking great up until today's analysis was finished. You saw it was completely objective. MFI,
Yep.
CMF, everything turned back around for this session. For this session, momentum building. Why? I don't have the answer to that. But the only answer I have to know is the one that's objective and what I'm seeing, and I go with that. So if I'm going to trade short, right, I need to be able to do what we just did here and then look for the possibility of rather going short. Now, if I'm going to go long, I've already explained where I'm going to go, right? Volume's picking up. So now I'm not going to question this. Do you understand? I've
Yep.
got the 15s that are clear. I've got the 5s that are clear. Everything is looking good. There's my preferred entry, right? Now I need to get back to the in the moment indicators, and I'm glad as hell that this is happening, right? Because my GAM is clear, my 1 minute VTC VMA is clear, right? Here's my
Yep.
GAM. See it?
Yep. There it is.
There it is. Okay. Here, look at this, right? I'm straight up.
Yep.
Here I am. I have no look back on this indicator. My level 2, my orders above the market, that one just got taken out. Are there more? Yeah. Okay. So let's get back to the 5-second VIT and take a look at that. All right, let's take a look at this here for a second and see what we've got, right? 1 second. All right. And your first price profit target is right there. See the back-coded orders that came in on the 5-second VIT and then here and then here? Since this event happened, not as grand as, the volume events we're typically talking about, but in the overnight session, those are some good quick orders coming in, back-coded orders. And you got them here, nothing's coming on the downside yet that can take that out. Now, if this trade turns back around and goes to the downside and doesn't get to the low of the up close from 126, right? Then you got to understand there's plenty of time to get back out of this before, you hit your preferred entry again. So that's the beauty of this. You copy me.
Copy that.
Right. So you're just about there. Maybe it's not time yet. Maybe we need more volume to come in. The 5-second is back up now, down. Okay. Maybe you could have got out on a failed try at the low of the up close, and maybe you want to hang the trade. The GOM says it's up and up and up. It's not coming back. See that?
Yeah.
See that? There it is. More orders coming in, accumulated volume, right? Here, here, here. Since we got through the ceiling at this point, right? We had your horizontal lines attached. Now you're seeing something a little bit different. And now, okay, we need to decide what we're going to do here. Are we going to stay the trade or are we going to go? The one minute VTC VMA has a down tick. Level 2 order standout is now 1 tick below the market. The 15s are still good. You have the 5s with the CMF on 1 down tick. So the idea would be to get out of the trade before you have a chance to give any money back so you don't turn this into a losing trade. Do you understand?
Yes, I do understand that. Yeah.
There you go. That's it. You're done. And knowing that the bias overall, right, for the session is short rather than long, could that possibly be the reason why this didn't follow through? You're goddamn right it is. You understand?
Yeah, I understand that. Yeah.
Good, good. So the beauty of this methodology is, number one, not only identifying the preferred entries with the correct volume that comes in, as you just saw on all fronts on the in-the-moment indicators, it's understanding that the end-of-day bias has a lot to do with what could happen out of this probability-wise. If we had a long level 7 market today, that trade would have followed through, no doubt whatsoever. You understand?
Yep.
There you go. All right. So it's always the relative comparison of one thing to the other. You start with the macro, move down to the micro. And now you get people hanging on to this trade, hoping and wishing and praying, well, maybe it'll get down to the previous session's open and stop there. They're way late, and you're already out before you had a chance to get a losing trade. Or, after you got a failed try to get to lower the up close, and this 5-second went south here, you could have got out and said, because you know what? It's just not time yet. It's only 8:36. It's early, although a lot of volume came in, right? And it's not time to follow through yet. They got a couple down ticks on the GOM. Let's take off $300, right? Instead of what we had anticipated to be a couple thousand. And that's it. Or let's get out here and have a break-even trade after commissions and operating costs. You understand?
Yep.
That's it. There you go. Trading, methodology, psychology, and risk management all in one single trading methodology. You don't need anything else. That's it. Well, you do. I mean, in essence, the only other thing you need is when you walk into that trading room, you're going to have to block out the outside world and any interruptions you might have. And if they're too strong and you can't shake it, then don't trade.
Yeah.
Nobody ever went broke standing on the sidelines, Paul. Nobody. You wait till you feel good.
Yeah.
You
Copy
feel
that.
good about it. And you look into stuff like this and you say, yeah, I got this thing. I